Everybody, Ben Hart here. It is 2 o'clock on June 11th. Appreciate you taking the time today. Want to give you an update on just what's going on in the world, the markets, and go through the charts and give you an update on that. So thanks for joining me. This Thursday we're going through interesting times. Obviously, lots still continue to happening in the world. The conflict between the U.S., Iran, and Israel continues. We've seen oil and gas prices fluctuate dramatically as we've gone through this period. A lot of the attention this week's been focused around PPI. So we had Chinese PPI and then US PPI come out today, both a little bit hotter than expected. Why people are worried about this is PPI's producer price index, which historically at least has flowed over into CPI, which is consumer price index, which is what the central banks of the world tend to use to decide what they're going to do with rates. We had the European Central Bank this morning raise rates for the first time in a long time, with the concern that they're seeing some inflation. So this is all flowing over into the markets, into the economy, and we sit on the precipice of SpaceX IPO that'll start trading tomorrow. So lots of things going on. Appreciate you watching, taking the time. Going to go through some of the charts, give you an update. But all that being said, is lots happening in the markets in the world. Markets, we saw a little bit of correction from June 1st until now, getting a bit of a bounce back up today across all asset classes. I think I'd say an interesting call out, at least from a year-to-date perspective. We're seeing both gold and Bitcoin down year-to-date, which is the first time we've seen that since Bitcoin started trading. So without further ado, I'm going to pull up the charts and then we can go through some of those pieces, and I can give you an update on what I've been doing from a portfolio perspective most recently. All right, so we are recording this on June 11th around 2 p.m. So anything that happens between now and next week at this time, we'll give you an update on at that given time. So let's just start off with this one. Great chart. This is emerging markets driven by growth. I think the interesting piece is, just as I look at the last few weeks, been trying to look for areas and sectors that offer relative value and potentially some opportunities. We've had a pretty good move from emerging markets out of the gate. So if you look at this as the emerging markets driven by growth, if we look at the black line on this chart, a lot of the appreciation's been in commercial and consumer services, discretionary spending, and info tech. So I think it's interesting. That's what's led the way from a cyclical perspective. We've seen energy, industrials, and materials underperform in that space. So as we're looking to rotate out some of these high flying performers, there's maybe some opportunities to start to shift into other areas and sectors. But right now, as you'll see from this one, that emerging markets is mostly driven by the growth sectors. And then as we dig down to what that looks like a little bit more, maybe on a country perspective basis. So this report is from our CIO office, supported by exceptional earnings growth. So expected annual earnings growth, you get the top bar, which is Korea. So if you look at the composition of the Korean index right now, there is 50+% in two stocks, semiconductor stocks. And so you've seen a huge appreciation there. Concentrated risk, of course, but you've seen a big capital appreciation in Korea. If we look at the top line, that'd be emerging markets as a group. And then we go down to Taiwan, NASDAQ, and then MSCI World. This is Canada, US, and EFI. EFI stands for Europe, Asia, and the Far East. So a lot of it's been driven by earnings growth. So we'll see. There's a lot of other fundamentals and such that are playing into it, but that's been a big reason why we've seen some capital appreciation in the emerging market space. And then this next slide is the fair value of 10-year Treasury yield. So I think it's really interesting to think about right now from this perspective of where we are in this cycle. So there's a few things to look at. Stocks have gone up. Bonds have really kind of moved sideways maybe now for the last 18 months. been lots of attention by the marketing world around saying balance don't work anymore. It doesn't make sense to have bonds in your portfolios. This fear of inflation. These are some of the things that I think are scaring the market a little bit. So I like this chart from a perspective of absolute levels. So this is the U.S. 10-year fair value model. Fair value is the light blue line. So the light blue line has fair value at 4.2, but the market's at 4.5. And then if we look back to what this means from a historical level perspective, and so the last time we reached these levels was around 2008. And so a couple of few things when I'm looking at this, and one of these is the standard deviation. So the top line would be two standard deviations above, and the bottom line would be two standard deviations below. So we're starting to creep up to these levels that potentially offer some reasonable risk reward. If you're thinking of taking on a bit of yield in the event that you're looking to protect the portfolio from some type of shock in the markets, this is showing us that maybe it's a reasonable point right now to consider doing so. The actual bond prices currently are trading above fair value. That's historically been a reasonable time to buy it and have some exposure there. So in an event where we see some kind of shock, typically what happens in that backdrop is you see yields fall. So if we were going from we'll say a 4.5% to maybe a 2.5% change in that 10-year, you're going to get a 10-year bond in the US. You're going to get about a 20-ish% capital appreciation from owning those bonds. So if you're looking to try to diversify and maybe reduce some risk within portfolios, and equity markets valuations are quite high, so there's a reasonable opportunity and thought around why and how it makes sense to have some bond exposure in the portfolio. As always, the opinions in here do not necessarily reflect those of National Bank Financial. Anything that we discussed today may be unique and different for you. If you have any questions or you'd like to discuss if anything's appropriate, please feel free to reach out to Eve or I, and we're happy to discuss and or speak with you about any of the things that we discussed today. All right, so that's it for charts of the day. I'd say one of the things that I mentioned off the top is one of the unique challenges is looking for some opportunities to maybe shift investments that have done well and look for ones that you can buy that are a little bit more attractive. And we're starting to see some value in some certain areas. So WSP Global, which is Canadian infrastructure engineering firm, is starting to look attractive. Exelon, which is a company that benefits from the growth of the data sectors. These are a couple of stocks that we've been reviewing and considering within portfolios, as we've seen some huge capital appreciation from some of the tech names that we've owned. So been looking to reposition and take advantage of that. The other holding that we've looked to add is TAIL ETF, TAIL, which is one that gives you some exposure to protect the portfolio if something happens in a material drawdown situation. So, a few things that we're doing, trying to insulate, make sure that we're well positioned. Lots of geopolitical risk in the world. Inflation's picking up as a result of it. And I think it's important now to pay attention to what you own, why you own it. Do you still want to have some growth? Should you be looking for opportunities where there's some better value and better priced stocks and or bonds? So been actively adjusting portfolios, and we're happy to discuss or speak with you about any of those. At any time, if you want to speak with Eva or I or book a meeting, please feel free to reach out. As always, please subscribe and watch our Hart Investment Group channel. And thanks so much for joining me today, and we'll see you all next week. Take care. Bye.